This morning while I was grabbing my coffee, and I genuinely thought my screen was broken.
Yeah, I know exactly what chart you're looking at.
We are sitting here, it's January 2026, and if you haven't checked in on commodities lately,
Yeah,
you are missing what might be the wildest story in finance right now.
you're looking at silver.
I am. But to call what's happening a bull run feels like, I mean, it's a massive understatement. It looks more like a vertical takeoff.
It's an unprecedented velocity. We're seeing moves in months that usually take decades in the metals market.
Let's just put some numbers on it. We're looking at the iShares Silver Trust, that's SLV, and since the start of 2025, so just over the last year, it is up 280%.
That's a crypto number.
Exactly. Not a metal you associate with, your grandmother's tea set.
Silver is usually the boring cousin of gold. But right now, it's the main event.
But here's where it gets really interesting, and this is why we're doing this deep dive. If you think the metal is moving fast,
The miners are moving faster.
so much faster. We're looking at First Majestic Silver ticker AG. Over that same period, it's up a staggering 364%.
Which is the classic miner leverage at work, but on steroids. It can make you rich or wipe you out.
Right. So the mission for this deep dive is to figure out, are we all just in a massive bubble, or has something structural, broken in the global economy?
I'll give you a little spoiler. The answer isn't inflation. It's actually much more high-tech than that.
Ooh, I love it when an old school commodity meets new school tech.
We're watching a fundamental shift in supply and demand, and it's largely driven by the tech that's probably sitting on your desk right now.
All right, so let's get right into that macro shift. I keep seeing headlines about a silver deficit. What does that actually mean?
It's pretty bleak, honestly. If you view the world as one big warehouse, the inventory is just draining fast.
So what are the numbers?
To understand the price explosion, you have to look at the gap. Right now, annual consumption is sitting at roughly 1,150 million ounces.
Over 1 billion ounces a year. Okay,
Yeah.
that's the demand side.
Correct. But on the supply side, what mines are actually producing, we're only at about 835 million ounces.
Whoa, that is not a small gap. That's a 300 million ounce hole.
It's a massive gap. And here's the kicker. This isn't a one-year fluke.
Right.
2025 marked the 5th consecutive year of a shortfall. We've been eating into existing stockpiles for half a decade.
So eventually the cupboard just gets bare.
It starts to look very bare.
Okay, but hold on. I have to play devil's advocate here. Basic economics says if the price goes up 280%, miners should be digging like crazy. Why isn't supply rushing in to meet demand?
That's the critical constraint of geology. You can't just, flip a switch to create more silver. It takes 10 to 15 years to bring a new mine online.
A decade.
At least. But there's a quirk specific to silver that most people miss. Most silver isn't actually mined on purpose.
What do you mean not on purpose?
About 70% of the world's silver comes as a byproduct.
Right.
It's an accident. Miners are digging for lead or zinc or copper, and they just find silver mixed in.
So if a big copper mine isn't expanding, you don't get the extra silver, no matter what the silver price is.
Exactly. The supply is what we call inelastic. It's just very, very stubborn.
That is a fascinating bottleneck. So supply is stuck. Let's flip to demand. You said this is a high-tech story. Why is the 2026 tech economy so thirsty for silver?
It all comes down to physics. Atomic physics, really. Silver is the single most electrically conductive element on the periodic table.
Better than copper, better than gold.
Better than both. It allows electrons to flow with the least amount of resistance.
I always thought gold was the standard for electronics. You see gold-plated connectors everywhere.
But that's for corrosion resistance.
Yeah.
Gold doesn't rust. But for moving electrons inside a chip, silver is king. And what's the one thing the AI boom needs?
Speed. And just massive amounts of electricity.
Precisely. We're building data centers that consume gigawatts of power. Inside those servers, you need semiconductors that transmit data at blinding speeds with minimal signal loss. You physically cannot build the AI revolution without silver.
I hadn't really thought about that. We think of AI as software, but that software runs on very real, very physical hardware.
Directly. And it's not just the chips, it's the thermal management.
Yeah.
AI GPUs get incredibly hot.
Right.
Silver is being used in high-performance thermal pastes and pads to draw that heat away, because it's also an incredible thermal conductor.
So it's a double whammy. You need it to move data fast, and you need it to keep the whole thing from melting down.
Right. And this isn't some future projection. First Majestic reported that industrial silver demand has already risen 33% since 2020.
33%, that's a huge jump.
It is. And we haven't even touched on the green energy side. The solar panels.
Yeah.
That's basically silver paste on silicon. EVs use twice as much silver as a gas car.
So silver has effectively graduated. It's not just a precious metal anymore. It's an essential industrial metal.
That's the perfect way to frame it. And that shift in identity is why the price is decoupling from its historical trends. It's trading on utility now.
Okay, so the macro backdrop is a perfect storm. Let's talk about the vehicle. First Majestic Silver, ticker AG. Why them specifically?
Well, there are bigger miners out there for sure.
Yeah.
But First Majestic is unique because of its purity. In the mining world, we call it a pure play.
Meaning they focus almost entirely on silver.
As much as you can. 57% of their revenue came directly from silver.
That is high.
It is, and if you include gold, 90% of their revenue is precious metals. So if you're an investor who wants direct exposure to silver, this is one of the cleanest ways to get it.
You don't want your bet on silver diluted if, say, zinc prices crash.
Exactly. It's about concentration.
Okay, but let's go back to something we touched on. Silver's up 280%, but AG is up 364%. Explain this levered play concept.
Right. This is the most powerful concept in resource investing. It's called operational leverage.
So how does the math work?
Okay, imagine it costs First Majestic a fixed amount to get an ounce of silver out of the ground. Let's just say their all-in cost is $20 an ounce. That's for trucks, fuel, labor, everything.
Okay, $20 is the break-even.
Right. So if silver is trading at 21 ones, they make $1 of profit. Slim margins. But what happens if the price of silver jumps to, say, $25?
That's a 20% jump in the metal price, but their costs don't instantly jump 20%.
Exactly. Their costs stay relatively fixed. So now, instead of making $1 in profit, they're making $5.
Ah, I see. The metal went up 20%, but their profit exploded by 400%. That's the multiplier.
That is operational leverage, and that's what analysts are projecting. They're expecting earnings to grow 52% in 2026.
Those are tech stock numbers, not some dusty old mining company.
That's the power of it.
Yeah.
And we saw it in their Q3 results. A 31% increase in the silver price drove a huge jump in their earnings.
So they're cashing in, but they've also been making moves, right? Let's talk about the Gatos acquisition.
This was a major catalyst. First Majestic bought a 70% stake in the Cerro Los Gatos Mine. This was a transformative move.
So they chose to buy production instead of trying to find it?
Exactly. Option B, it's faster.
And what do they get for their money?
Volume and longevity. In the third quarter alone, this new asset added 2.1 million silver equivalent ounces. That's substantial. But more importantly, it extends their reserve life.
Which is basically the expiration date on the mine, how long they can keep digging.
Right. It gives them secure production out to 2032. That removes a ton of anxiety for investors.
And reading through the notes, there seems to be a bit of a treasure hunt aspect to this deal, too.
Yes, and this is where it gets exciting. The property covers 103,000 hectares.
That's huge.
It's massive. And a lot of it is just unexplored. So they bought the known production, but they also bought a lottery ticket for what else might be buried out there.
So you've got the price of silver rocketing up from AI, you have a pure play miner with leverage, and now they have a new source of supply with upside, it sounds. Wait, it sounds almost too perfect.
And that is exactly when you should get a little nervous.
I knew there was a but coming. Let's do the reality check. What kills this trade?
The biggest risk is the double-edged sword of that leverage we just talked about. It's brutal on the way down.
The same math in reverse.
Ruthlessly. First Majestic put out some numbers. As of last September, a mere 10% drop in the silver price hits their net earnings by about $7 million.
Just a 10% swing wipes out $7 million. Wow.
Correct. If silver prices plummet, earnings could get crushed overnight. This is why they call it the devil's metal.
And just looking at the stock price, the 52-week range is huge. It's been as low as $5.09 and as high as $27.90.
That shows you the volatility. If you bought at $5, you're a genius. If you buy at 27 and it pulls back, that stock could drop 40% or 50% in a flash.
What about the risks on the ground, the actual mining?
Right, mining is hard. It's complicated. You have rising costs from inflation, fuel, labor, machinery.
So your margins can get squeezed even if the price is high.
Yes. And then there's geopolitical risk. You can't ignore where these mines are. First Majestic operates primarily in Mexico.
Which is a mining powerhouse, but it has its challenges.
It does. You have disputes with local groups, changes in tax laws, labor strikes. These are physical assets on the ground. They're not Bitcoin on a USB drive.
It's a high-risk, high-reward game.
Absolutely.
Okay, so let's bring this all together. What does this all mean for someone trying to make sense of 2026?
I think the summary is this. The game has changed. We're seeing a collision between the old economy digging rocks out of the ground and the new economy of AI and electrification.
The cloud needs the earth.
That's a great way to put it. You have a structural supply deficit meeting a new, explosive source of demand that sees silver as a necessity, not a luxury.
And First Majestic is positioned as the pure play vehicle to ride that wave.
Correct. They have the reserves, the production growth, and the leverage. If you believe the AI boom continues, the thesis is very strong.
But you have to have the stomach for the volatility.
You absolutely do. This is not for your mortgage money.
It really does change how you look at the world. I mean, I'm looking at my laptop differently now.
That's the so what here. Silver has evolved. For thousands of years it was money. Then jewelry. Now it's technological infrastructure. We should be filing it next to lithium and cobalt.
That's a fascinating shift in perspective, and it leaves me with a final sort of provocative thought.
What's that?
If silver is now critical for AI, for chips, will we stop viewing it as just a commodity? Right now we trade it like wheat. But if it's the lifeblood of AI...
Do we start pricing it like a technology component?
Yeah. And what happens to that deficit if the AI boom accelerates even further from here? What happens when it's not just a shortage, but a strategic crisis?
That's the multi-billion-dollar question. When an industrial necessity becomes this scarce, the price discovery, it changes. It becomes about national security.
What if a company like Microsoft or Google just decides they need to secure their own supply chain and start buying silver directly from the mines?
If big tech starts buying physical silver to hoard, the price doesn't just go up, it goes vertical.
It's nothing to think about. That's a wrap for this deep dive. Thanks for exploring the depths with us.
Thanks for listening.